In this video, I'm going to walk you through exactly how to use SellerAmp and Keepa for Amazon product research. This is going to be a structured guide on how to use both of these tools correctly. First, we're going to dive into SellerAmp and go over everything you need to know, from proper setup to interpreting the data so that you're not making the wrong buying decisions. Next, we'll move into Keepa and break down the charts, the key definitions you need to understand, and the tactical rules you need to follow to make sure you're doing proper product research. And finally, once everything is set and you understand the basics, we're going to do some live product research examples. So let's get into the video. All right, so the first tool that we're going to go ahead and get into is going to be SellerAmp, which is going to be our profit calculator. So what we're going to look at first is going to be the settings to get you guys set up on the right track. And then past that, we're going to look at a few different bullet points on the SellerAmp extension. I'm not going to go too deep into detail on the ones that don't need it, but definitely quick info and alerts, and also the Google Sheets integration, profit calculator. Some of the more important ones we'll dive deep on. Okay, so you can get to your settings in SellerAmp either from the selleramp.com website and logging in, or you can go into your extension and click the gear icon in the bottom right. From there, we're going to be taken to the settings menu, and I want to first focus in on inbound FBA shipping here in the Amazon specific tab. So what is inbound FBA shipping? Well, basically it's going to be the cost per pound that you pay to actually send an item to Amazon for fulfillment by Amazon. So the way you're going to figure out your cost per pound is going to be to take however much you paid on your last FBA shipment. I'd recommend using a shipment that was a pretty regular size shipment, nothing too crazy, either on the far end of the spectrum or on the low end. And you're going to go ahead and divide that by the total amount of units that you sent out, and that's going to be your cost per pound. So think of it as like cost per unit, right? If I'm going to send 100 units and I'm going to pay $100, right, then I'm going to be paying $1 a unit. And that's really the way to think about the per pound inbound FBA shipping we see here on screen. This used to confuse me a lot when I was a beginner because I feel like nobody was explaining it that simple. And then also it's hard when you don't have many shipments. So if you've never outbounded a shipment before, I recommend setting this to about 80 to 90 cents. You can just do 85 cents to be in the middle. That tends to be a pretty safe amount. And then once you start sending more shipments, you can start to decrease this down to 70 and maybe even 60 cents a pound. And if you start doing even bigger shipments, even lower than that. The next thing we're going to focus on is going to be the inbound placement. So this is just basically if Amazon's going to charge you a fee to store your inventory. So we have Amazon optimized splits, partial shipment splits, and minimal shipment splits. So what is an Amazon optimized split? Well, it's basically when you have 5 identical boxes with the same dimensions and weight, and those boxes have to include the same amount of units per ASIN in each of them. So for example here, if we were going to send 5 units of this and 5 units of this across 5 different boxes, each box would need to contain 1 unit of each to be considered optimizable for no placement fees. Okay, so Amazon optimized splits is going to avoid placement fees. Partial shipment splits does not exist anymore. That was an old feature that Amazon no longer offers. And minimal shipment splits is you can box your items however you want. You can put as many items in a box as long as it's going to fit in the box and the dimensions aren't larger than 25 inches on each side. Nowadays, it's a little bit bigger than 25 inches, but I like to stay within that threshold. And also your box cannot weigh no more than 50 pounds. So anything within those limitations, you can send either 1 box, 2 box, 3 box, but just know that your inventory is going to get charged a placement fee, which can typically range anywhere from around 20 to 70 cents. I've seen a little bit more if the item is oversized or if it's a bigger item. So if you're a beginner, what I would recommend is to leave this on minimal shipment splits. The reason why is because you're likely not going to have enough inventory to reasonably create 5 boxes worth of a shipment. So because of that, you're going to have to stick with minimal shipment splits. Once you start sending around 250 to 300 plus units in a shipment though, you can definitely start to optimize it, especially if what you're sending is heavier, because the goal when sending shipments is really to be able to maximize your dimensional volume with the weight as well. So like you wouldn't want to send 5 boxes of only 10 pounds because you're going to end up paying more in inbound shipping than you would if you were to just eat the minimal shipment split. So those are definitely the 2 most important settings I can advocate for here in SellerAmp. And then the last few settings that we're going to go ahead and take a look at is really like minimum ROI. So I would recommend having this at around 25%. 30% is good as well, but 25% is a nice threshold. It gives you some room to go out and find some products. Still keeps you profitable. Your margin will probably be anywhere from 11 to 12%. And another thing I want to touch on is going to be the prep fee, miscellaneous fee, and the percent. So a prep fee is if you use a prep center and you have to pay them a commission of basically what they're helping you send out. So that'll be on a per unit basis. And I pay right now $1.30 to my prep center per unit. And then miscellaneous fee percentage, we're going to ignore the miscellaneous flat fee. That's just if you have external expenses. Miscellaneous fee percentage is going to be good if you have to pay sales tax on your inventory. So before I had switched to a prep center that was tax free, I was paying 7% because I live in Ohio. So I would always have this at 7% to ensure that when I was to buy an item from a supplier, that sales tax was already being factored in on my profit calculator. And the way you can avoid this if you're not using a prep center is by getting a resale tax certificate, basically a tax exemption that lets suppliers who are eligible to give you that discount, lets them know that, hey, this order is going to be tax exempt, saving you an extra 7% or however much your state charges. And then the rest of these settings here are a little bit more nuanced and filler settings. Next thing we're going to go ahead and get into is display. The one thing I suggest you turn on is show profit margin. That's going to show the actual profit margin you're making on a product. And then the last thing here is going to be the SAS panels. This is just basically going to be all of the panels that show in your SellerAmp extension. Pretty much everything that we're about to cover in a second. So now if we go ahead and take a look at the SellerAmp extension on a product page, we can see we have the Sephora product, for example. You can move this SellerAmp extension around. So I like to have this just kind of in the right side on, the smaller image. Just helps me move around the page a little bit easier. So the main areas that we're going to go over is going to be in this quick info. So if you are eligible to sell a product, you are going to see that this is going to say yes. Right now it says check alerts panel because I'm not logged in. If you're not eligible to sell this product, then you're going to see the text that reads no in red. This is going to tell you that you should apply for a manual ungate to see if Amazon allows you to sell this product or not. Next is going to be alerts. So this just shows anything that could go wrong with the listing. The main ones that I like to look out here for is not necessarily anything like IP complaints, private label, anything like that, because we're going to use Keepa for that stuff. But more so if something is dangerous goods, hazmat, meltable, that kind of thing is really useful to see because it's not something that you're going to be able to find on Keepa. And some products will surprise you with their item classification. You can also see if an item is oversized. That also does come up with OS on the alerts tab here. BSR is going to be best sellers rank. So what this is basically think about it as Amazon ranks each product on their platform within a best sellers rank for that specific category. So this is in the beauty and personal care category, and it is ranked the 183,000th product in the beauty and personal care category. Now, the misconception here is that you would think, oh, because it's higher ranked, it's going to be better. No, because you have to look at it from the lens of if I'm the #1 ranked product on Amazon, I am the fastest selling product on Amazon, and sort of holds true here, a little bit nuanced, but the general rule of thumb is that the lower the BSR, typically the faster the item sells. So the lower you can get the BSR to be, you're typically in a faster moving product. I would recommend if you're just starting out to stay below a 300,000 BSR. That seems to be pretty decent. You can still snag some deals upwards of 200,000. I don't think completely excluding that is, unreasonable. But over 300,000, a lot of the stuff you're going to find is just not going to move as well and really not worth the time investment. However, once you start getting more experienced, I personally don't put a limit on BSR. It's not something that I look at that needs to be limited because it's just an extra metric. And while it does matter, it doesn't fully determine velocity, which we're going to go ahead and get into here in a little bit. Estimated sales is this monthly sold sticker. So I guess you can't see it right now, but typically Amazon will have a monthly sold sticker saying this item sells X amount per month, similar to how we have on this Milwaukee listing to where you can see 1K bought in the past month, estimated sales 1K. So that'll pop up. This comes directly from Amazon themselves. Next thing is going to be max cost. So all this is basically telling you what's the max that you can pay for an item based on your target minimum ROI. So because ours was 25%, it gave me a max cost of $12.83. If we go 1 cent over, it's telling us that we are pretty much break even with that ROI. And if we go another cent, we are now below our target ROI. Cost and sale price, very self-explanatory. How much are you buying it for and how much are you selling it for? Profit, self-explanatory as well. Margin, ROI. All of the numbers here that you need are broken down in the quick info. Rank and prices we are going to skip. It's just basically a summary of what we can see up here. So we're going to go ahead and skip that. Alerts, the only useful thing on this is going to be really the ungating. So if you have to log in to see if you're eligible to sell a product, you'll see the notification like we have on screen. And then if you're not eligible to sell the product, you'll see a manual ungate button that SellerAmp is going to redirect you to your selling account. And from there, you can submit a manual ungate. Next, we have the charts here, which is just basically a smaller snapshot of the bigger picture on Keepa. So not going to really talk too much over that. So next is going to be the fulfillment type toggle here in the profit calculator. So you can see we we can toggle this between FBA and FBM. Basically, if you're going to sell an item fulfilled by merchant, you want to make sure that you understand how much it's going to cost you to fulfill that item. Because if we pull down the total fees menu, you can see when we select FBM, all of our fees actually get overridden because Amazon is now putting that responsibility on the seller to make sure that they are accounting for all of their fees, because Amazon's not really involved in much of this process. So all they take is their referral fee and you're left with the rest. Now, FBM and FBA rates are typically about the same, so you're really not going to get a benefit from doing FBM in most cases. So I would just stick with FBA for the beginning and keeping this on. Merchant fulfilled is a great way to get some early proof of concept if the item is merchant fulfillable, but most items aren't going to be merchant fulfillment friendly, so you're better off sticking with FBA, and all of our fees are automatically calculated through SellerAmp this way. Next thing is going to be the Google Sheet integration. So this is super cool through SellerAmp. You can basically configure field mappings inside of SellerAmp, which I'm going to go ahead and show you how to do in a second. And what this is going to do is it's going to give you Google Sheets that you can then take all of those field mapped settings and information. So let's say you wanted to export the quantity of this item, the cost price, and the sale price. You would just go ahead and click on one of these sheets that have the fields mapped. And what that's going to do is it's going to automatically extract that information from the Amazon product page into your Google Sheet. And the way you can do this is going to be within settings. If you go ahead and click Sheets at the top here in the selleramp.com web application, and then you go to Setup, and from here you can connect either an existing Google Sheet and then make the field mappings that way, or you can create a new sheet and select from a bunch of options and field mappings. Notes and tags is if you're going to want to add a note to this specific product. This does save after you click the save button. And then the last thing I want to touch on is going to be offers here. So offers is basically the list of competitors that are selling on this listing. You can see live offers and recent offers. I recommend just keeping this on live. You can also see prime eligible offers. So that's going to be all people who are FBA. And you can also see all offers. Again, I'd recommend keeping this on all. And from here, you can see each individual storefront that is selling this product currently. You can also find this below the buy box. So this is the buy box right here. You can find this below if you click other sellers on Amazon, but you will usually use this offers tab to begin sort of storefront stalking. There's a better way to source, but that's the start of it, just to pull seller IDs. But this is very useful. I use this pretty much every day, me and my team. And it does tell you, how much stock people have. The stock is not very accurate, so I wouldn't trust that, but it does tell you what price they are currently priced at. So with all of that out of the way, we have just ticked pretty much every single box here worth noting. So our next part in this segment is going to be Keepa for product research. So Keepa works in a couple different ways. And as we've seen, there are pretty much 3 charts, and we're going to go over the definitions of each of these. So the first chart is going to be your price chart. So this is going to tell you all about the sales rank of the product, so where it ranks in Amazon's pretty much catalog of products for that specific category. The buy box history, which is the price history, Amazon's history, which if Amazon has been selling on the listing, and then the new third-party price, which is just showing what third-party sellers are pricing the product at. So if we go ahead and take a look at this Sephora product here, for example, and we just go ahead and disable a bunch of these other configured options, we can start with the sales rank. So we can see this is represented by the green line in the top chart. Again, the lower the sales rank, typically the better the product sells. Just means that the product is being ranked better in its overall category. So this is going to be a good indicator as to whether or not this product is selling relatively well. If it's not selling well, typically you can just tell though by the indication of the physical number itself and not necessarily by the trend that we see in the top. Sales rank is good to track any seasonal products. If that is a thing, that's typically where you would use more so the trend of it. But yeah, sales rank is just a general outline of velocity, but it's not the main factor we use. Next is going to be the buy box. So this is going to be the buy box history, which is basically the historical price history. This is going to represent exactly that. And it's going to show you as you hover over people who are in the buy box and were getting the buy box historically. And all of these charts, by the way, are configured to being from a year long, or you can go and look at the all-time data to see the differences in each of these filters here. Next is going to be new third-party FBA and FBM. So again, this is going to be the price history of the third-party FBA sellers, which are going to be the guys that we see in SellerAmp here, and FBM sellers. All this is representing is the orange triangles are FBA offers and the blue squares are FBM offers. This is useful if you're looking at a listing where there is no buy box like how it looks like right now. You would basically use the median price of the overall trend of this to determine determine where you're going to likely sell that product at. So that's everything for the price chart on a very surface level. Next thing is going to be the velocity chart. So this is going to show you the subcategory sales rank. So if an item is in beauty and personal care and it's a face moisturizer, that might be a subcategory. And then we're also going to see the monthly sold. So the main thing we want to focus on isn't really any of these subcategories. I don't use these. They're just extra sales rank charts, really. So as you can see, there's just like more sales rank charts. We're going to look at monthly sold here. This is a very easy indicator to pick up on. All it is just a yellow line that tells you basically how much the product is selling per month. And again, that just comes right from Amazon. So it is something I like to have on, and you can see historical metrics for this product, but that's pretty much all the middle chart represents, is just the monthly sold sticker that Amazon gives a product. That is it for the velocity chart. And then the final chart is going to be the bottom one, which is your offers chart. And this is going to contain the rating count and also your new offer count. So ratings is basically going to look like this. This is just how many ratings the product has accumulated over time from customer reviews. So really not all that important. But if we go ahead and take a look at new offer count, this is probably our most important chart outside of just knowing the buy box history and price history. And the reason why this is the most important is because this pretty much determines price history, velocity, and it's all represented by a couple different factors with this blue line. So there's going to be some tactical rules that you're going to want to follow so you know how to actually read a Keepa chart. The first thing is going to be understanding that all of these charts are correlated in some way, and most of the correlation is dictated from what's happening in this offer count here. Offers chart does determine like price trend history. So if a price is starting to dwindle off, that's going to be likely due to the offers. And then also offer chart movement indicates proven velocity as well. So like we were seeing with sales rank, how it's sort of just like the number you would think in your head as to this product might sell good off the bat or really bad off the bat. This is the actual proof behind that. So we're going to figure out with the offers chart here how to determine velocity and future trends with this bottom chart. So now that we go ahead and turn on all of the other statistics here, this is what a standard Keepa chart is going to look like. So basically what we can see here is that overall this trend is pretty stable. So if we take a look at the trend of the bottom chart here, we can see that right now it's starting to dwindle off from that 18 offer count it had right around middle of January to now it has about 11 offers. This is a good sign. What you want to see with your offer count is that it is moving. So you want to see sort of like these dips and divots here. You want to make sure that the offer count is moving because that proves that this product is selling. And then second off, you want it to be ideally either declining or stable, which we can see this price history ever since this offer chart has been stable, has also been stable. Really, this bottom chart determines kind of everything that happens above it. So like if we can see more people are moving this, it's likely that this product is selling, good or better. And then also if it's being stable, then we can clearly see a direct indication in the price history. So overall, I would consider this to be a good product. And we're going to go ahead and get into what good, bad, and sort of gray area products are here in a sec. So if we come over here to our good versus bad and our gray area qualities, we're going to go ahead and touch on what are good qualities in a Keepa chart. So good qualities is good offer count movement. So again, that's going to be this bottom chart highlighted by the blue line. We want to make sure that that is moving and sellers are basically selling out of inventory. That's a good way to think about it, is when you see people coming off the listing, it means that they are selling out of inventory. So good thing to see there. We want to see a stable or increasing price because we don't want to be working against the market. This does come with a caveat, which we'll talk about in a minute, but overall stable or increasing prices is favorable. Offer count is stable or trending downward. And then also our margin is at expected. So I would recommend you source at around a 12% minimum margin, or you use ROI and do 25, 30%. Now the bad qualities of a bad product is going to be if the brand sells on the listing, there is a sign of potential IP complaint issues. The offer count is not moving, so it's like flat or blocky. If the offer count is trending upwards in a really aggressive spike, that's also not a good sign because the price is likely going to tank. And then also if you're not meeting target margins, of course, that's not going to be ideal. So now that we've seen what good qualities come from a product, and we actually have an example of this here with the stable price and stable trend, along with the declining offer count and good movement, let's go ahead and take a look at some products that have bad qualities and things that you should avoid. So the first example of a bad quality in a product is going to be if the brand has ever historically sold on the listing. So we can see here, this brand is called Glowing Goddess, this product here. And if we take a look and just hover over the buy box price historically, we can see that they have sold this product less than 3 months ago. And the reason why we want to avoid this is because if the brand has sold the product in the past, it's likely that they can continue selling it again. And usually what happens if the brand notices that third-party sellers are selling their products is they will issue an IP complaint or kick sellers off the listing. And that puts your account at account risk deactivation. And we don't want to do that. Now you can beat IP complaints through your invoices, receipts, order confirmations. So with that being a risk we don't want to take, another thing I like to look at to verify the brand has sold on the listing is if I pull up the all tab here in the Keepa chart, you can also see the entire historical data of a product. So we can see this brand has sold their own product for quite a while. So I suspect a lot of these sellers are going to get kicked off soon, probably get issued an IP complaint and put their account at risk of deactivation. Next thing that you want to avoid is those IP complaints. So there is a way to actually avoid IP complaints, and there is an indicator of what an IP complaint actually looks like in the Keepa chart. So you want to avoid the brand selling on the listing first off and foremost, just because that brand in specific, this Glow Goddess, hasn't issued an IP yet. But what a real IP complaint looks like on Keepa is notice how there is a huge break in the offers from 50 down to 3 here back in the historical data of this particular product. So what this indicates is that about 44 sellers down to 3 sellers got kicked off of the listing. And again, that is what's likely going to happen here to this brand, not only because, well, I guess mainly because the brand is selling on it, but in the event where, let's say, you're just trying to verify that you don't want to get an IP complaint, you will want to look for any sudden drop-offs in the offer count like this. Okay, so we want to make sure we're avoiding really sudden drop-offs in the offers. All these offer counts, when they're declining, should be in a linear progression similar to how this Sephora product is, nice and linear. We can see here, even something that started to rapidly sell out, it's still linearly going down, sort of like a roller coaster, right? But we can see here that everyone just got completely kicked off immediately. So avoid IP complaints, that's the signal there. Offer count is not moving well, so it's flat or blocky. So we can see this chart, the good product chart, is moving well. There's not too many blocks, it's not super flat. And if we take a look at a product that doesn't sell very well, like this toolkit from Milwaukee, we can see that everything is kind of slowed down, right? So you can see sales rank here is like really jumpy, and then it comes up and down, like really jumpy rank. You can see that mainly the offer count is really flat, it's blocky. You can also see that this product doesn't actually have a buy box, and that doesn't have anything to do with it being a slow seller. However, we just want to avoid products in general that don't move well, because this is an indicator that this products are likely not making enough sales, and we don't want to get stuck holding inventory and also having our bankroll tied up in products that don't sell. So avoid offer counts that are not moving and are flat and blocky. Another thing is we want to avoid offer count spiking rapidly to the top of the mountain, basically. So if we take a look at this Glossier product here, we can see that this product went through a massive offer count spike. And we can also see there's a direct correlation with the price history because of this. So the more supply that came onto this product, there was clearly not enough demand to meet the supply at the given price. So what happens is the price history tanks and the offers continue to rise. So this is why we want to avoid spiking offers that are going way up, because this will always result in an inevitable price tank. It just takes some time, but we can see right here, offers have completely tanked out this product. Now, if we were going to buy this today where the offers are cooling off a little bit, yes, they are still rising, but this is also on a 30-day time frame. We can see that price has started to kind of flatline out right around that $24 mark. So if you're profitable enough today, this would be something that you can still go ahead and buy. You just wouldn't want to be getting caught in the mix of this. So that's another thing. And then of course, if you're below margin. So that is the main good and bad qualities of a good product versus a bad product, and stuff that you want to look out for when doing analysis. And then a couple of quick gray areas that we can touch over is going to be if Amazon is currently selling on the listing, if there is a suppressed buy box, if there is a suppressed sales rank, what are seasonal products and how do you look for them? And then also offer count rising, but your margin is high. So this bottom one's probably going to be the most practical to talk about. So if your offer count is rising, but your margin is high, we can use this Glossier product as an example. Let's say that you were going to buy this on January 3rd while the offer count was rising and it was $40. Let's go ahead and plug 40 bucks into our sale price here. And let's just assume that we were going to buy this at this insanely good profit margin. So with a profit margin this high, it's okay to go ahead and say, you know what, I'm going to actually take a shot on this listing, simply because even if this product does continue to tank down, the likelihood of you not making money here or going below break even is very slim, Now, if you're in a situation where you're buying this for just, just at profitable prices, so like 22 bucks, and you are buying when the market is going in this direction, this is where you'd want to avoid it because you don't have any cushion to absorb price tanking. So that's the general rule of thumb in like sort of the gray area classification if the offer count is rising, but your margin is pretty high. Another gray area is going to be if a product is seasonal. So if you're selling like, I don't know, pumpkin scented stuff in October, those are obviously going to sell a lot better than if they are selling right now in February. A suppressed sales rank. So what this is going to look like is just no sales rank. So again, because sales rank is just a partial indicator of velocity, really not a big deal here because we can still see that the offer count is moving well. So this would still be a product that is considered good. Just a little bit of a gray area and something that you need to be mindful of. A suppressed buy box is going to be when the buy box is not present and you have to rely on the new third-party FBA offer prices. So this is what we call suppressed. And basically all this is you're just going to price realistically with the market. So again, think about it in trends, not in exact prices. So from the overall trend of this market, I would say a majority of the time the FBA offer is sitting at around 22.20. So that's probably where I would price this product if I were to go buy this today. And then the last thing to look out for is if Amazon sells on the listing. So this will be represented by this orange line here in Keepa. And we can see Amazon is selling on these Nike socks right here. And it really just depends what the market is telling you. Some listings you can compete with Amazon, especially if sellers are getting buy box over Amazon or they're selling it like below Amazon's price. But in the beginning, just something to be mindful of. I wouldn't recommend going for these type of listings if you're new, but as you get more experience, these become easier to tackle and really isn't such a scary thing. So now that we've taken a look at good, bad, gray area qualities, tactical rules, all three chart definitions, and you know how to use SellerAmp, you are pretty much ready to go and start sourcing products the smart and the right way. Before we go ahead and end the video, I'm going to do a couple live examples to walk you through what I personally think each product that we haven't taken a look at is, so that you can get a better understanding and walk away from this video with some value and knowledge on how to go find your first profitable product. So let's go ahead and take a look at this Milwaukee listing here. This is just going to be a standalone drill. So this product to me off the bat is a good product, and let's think about why. Okay, so we can see that the offer count movement is very, very solid. It's a very quick moving product, not only just because it sells 1,000 times a month, but because there's a lot of movement in the offer count history here. We can see that the buy box trend is starting to go upwards, or at least it's been stable for the most part. And that is again depicted off of the offer count trend being in a favorable trend of ours. So that would be downwards or stable. So this product already checks the fact that it has good offer count movement. It has a stable or increasing price, and the offer count is stable or trending downward. So analysis wise, this product does check out as long as it's profitable. All right, the next product we have here is going to be that glowing goddess product we saw earlier. So something like this, again, I'm already going to stay away from because the brand is selling on it. But had I not known that, just based off of the trend of this product, I can see that right now offer count is starting to spike up. Price has held pretty well, so there may be enough velocity to determine that this won't tank off as hard. But unless I have a little bit more padding in my margin, upwards of like 17, 18%, probably not going to take a chance on this one. More so if it's again down at those lower margin levels. And the biggest thing is because the brand is selling on this, it's only a matter of time until something goes wrong. So this product is not going to cut it, and it is a bad product. And then one more example of a product here. So we have another Nike sock listing. We can basically see that this is also a very good indicator of a good product here. We can see that the offer count is moving very, very well. It's also very stable in the most recent time. And we can see that the buy box is also reflective of that. So I'm sure you're starting to pick up a common theme here that if offer count looks good and it moves and it's stable or trending downward, then your price history is likely going to be okay. And then the last determining factor is if you are profitable or not. So that's going to be everything for this video. I hope you were able to learn a good bit and learn how to use both of these products in congruence. Again, these are going to be the softwares that really is all you need to go ahead and find your first profitable product to sell on Amazon. So that about sums everything up in this video. One more thing I want to mention is if you haven't subscribed to the newsletter with the link in the description, I highly recommend you go and do so, because if you want more free value like this that's going to help you start or scale your Amazon FBA business, I give so much game in that newsletter. I post once a week on Wednesdays, typically like to post around noon. So stay tuned for that, and stay tuned for my next video, and I'll see you guys in the next one. Peace out.